Sorry, almost ready. Sorry, right before the webinar, I did something to my camera, which pulled a cord, which knocked over my coffee on my desk. And you know the size of my coffees. And it's spilling all over my taxes, all over my $3,000 laptop, all over just like my keyboard. Yeah. So, yeah, I know it looks sleepy. It's more discombobulated than sleepy. I've been here at my desk for hours and hours. So, yeah, I'm not really a sleep-in dude. Anyways, let's go. So let me remind you that trading is risky and it's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please, if you will, could you please be small, stay humble, focus on the long term, and never risk money you cannot afford to lose? Cool. So good morning, my name is Wayne. I'm a currency trader just like you. We are here to trade currencies. We're going to look at Aussie dollar, Euro dollar, Canadian dollar, Japanese dollar, pound dollar, Kiwi dollar, Swizzy dollar, dollar, you know, those things. You're like, hey, it's not a dollar, it's a yen. Okay, cool. But what we're going to do is look at the strong versus the weak and see where we are in relative strength. You can see, even if you don't like the direction of the market, in many cases the market moved beautifully. See, I was messing with my camera. That's what caused my problem. Oh, that's not bad. All right. So anyways, so the market has been very good for some and disappointing for others, but has moved logically. And that's all I care about. It's when it's like, oh my God, what's going on? None of this makes sense. Cats are living with dogs. What's going on? So anyways, no, actually, it worked out. So I know some of you have profited, and I know others were kind of like, right? But that's where we are, and we are waiting for the election and stuff. But anyways, I hope you're on the right side of this trade. If not, like some people we know maybe got knocked out of a whole bunch of trades. Happens. Water off a duck's back. Right? Water off a duck's back. So anyways, thank you for being part of the Forex.Today YouTube community. What is it, 16,000 people? I appreciate that. Thank you for being here. Thank you for contributing. I call it participation. There you go. I call it participation. I like it when you participate with action. That's asking good questions, that's being involved, that's supporting each other. both, on how to do things or where to get things, but also emotionally being there for them. This is a really good community, and I hope you are an active participant in the goodness of this community. If you're a spammer, jump off a bridge. Right? Cool. Right on. So if you need a broker, by the way, tradersway.com. They help us here, this community, so that's cool. Tradersway.com. Fast execution speed, small spreads. By the way, I didn't even notice this until yesterday. I was on the website because I'm not an ECN guy, but apparently Traders Way since COVID has cut their ECN fees in half. Just to say, hey, like to support their community. That's amazing. I didn't know. I don't trade any ECN. I like soft dollars, not hard dollars. But anyways, that's really cool. I'm like, wow, that's cool. I wish I had known that. I could have told you. Also, the other thing I learned on tradersway.com, there's like on tradersway.com when you click on like MT4 or MT5 or whatever it is, there's a Mac version, and people all the time they're like, I try to install your templates, it doesn't work on a Mac, an MT4 on a Mac. I'm like, dude, grow up, do some research, figure out how to do it. People do it. I don't know how to do it. I don't have a Mac. But apparently I could have just said, well, go to tradersway.com. There's like a Mac version. Gee whiz. I didn't know. I don't use a Mac. Okay. So anyways, there's easy answers to these, unsolvable questions, right? So anyways, it's out there. So thank you very much, Traders Way. If you like my charts, the chart templates are listed there's a link to my chart templates in the description below the video. There's a link to my book in the description below the video. There's a link to my training courses at fxbootcamp.com and the live trading groups and all that. The link is down there. And of course, a link to Traders Way. So, right? There you go, right? Cool. And I hope you're doing all right. I hope you're doing good. Okay. Cool. So here we are. What do you see? Ripper strong. Swissy, yen, and dollar. What could that mean? Right? Wink, wink, cash. This is, I don't know if cash is in the webinar today, but wink, wink, nudge, nudge. What could it mean? We don't know exactly what it is, but what could it mean? Risk off. Yeah. Any particular reason? Was there geopolitical risk? Was there, what was it? Is it North Korea? Is it South Korea? Is it the Russians? The Chinese? There's always someone that gets the blame. Is it, right? Is it North Korea, the Chinese, or the Russians? Whose fault is it? China? Made us just like, it's all the communists. You put them all together, it's all their fault. It's the collective communist community, the CCC. Yeah. How about the government's inability to produce a stimulus package for the good people of America? Yeah, Henry says European leaders couldn't agree on it. They've never agreed on anything. It's so funny. Never. They've never agreed on anything. But anyways, yeah, we know part of the risk on play is where's our free money? No free money. So the other thing that's going on is we're waiting. We're treading water. We don't know what's worse, the waves or the current. All we know is our number one goal is to not drown. Yeah. Bad data from China, yeah, but you know, yeah. So things could be better for sure. Okay, things could be better for sure. Euro down, CAD down, Kiwi down, pound down, Aussie down. Everything's down except the funding currencies, which are up. All of which is bad. So is it chaos? Is it cats living with dogs? Is it bulls living with bears? It's simple risk off, but even more so. Like let's pick on some dollar. Let's do some dollar pairs. Okay. So one of the things we need to always do is, as a trader, we need to know if we should be panicking or if we should not be panicking. Know when to hold them, know when to fold them, know when to walk away, know when to run. So we have to analyze, like, dude, how wrong am I if I'm wrong? And is this panic mode or not panic mode? Should a bull, for example, panic in this mode? You say, well, Wayne, you should never panic. Okay. Well, when should you, react? So let's look at this. Euro dollar, this is 40% of the entire foreign exchange market, according to the Bureau of International Settlements. And you're like, Wayne, what's the BIS? The BIS is a central bank for all central banks. And central banks are banks for banks. Who controls the money? So anyways, according to the BIS, 40% of everything is this. Okay. So the next question is this freak out time? Is this crazy unusual? Okay. Well, let's look at the last period. This was a buy. This was an exit. And then looking at this period, that's the exact bearish price. I didn't say I was a bear, but if you were a bear, that's the exact price. And here's the cool thing. There's their out. So I'm not a bear, still not a bear. But if I was a bear, this 17 level is super important, eh? For sure. Why? Because there's probably a reasonable propensity for these bears to exit, which would be next week's bullish rally. It's Thursday, guys. My live trading group, my swing trading group, meets on Thursday afternoons to discuss such things. Some people are like, what should I do at 17? And we're already like, this is next week, bro. We're already on next week. Okay. So, yeah. No, that's correct. It doesn't mean buy, but it means they will exit. So, for example, it could be scalp mode. Okay. Also, what I'm also saying is, if it starts making higher highs and higher lows, then it is a time to buy. If you're a bull. Okay. Now, I believe early in the week, we talked about this being critically important for bears. Okay. The other thing we talked about is this is a buy and this is a buy. This was plan A if you were a bull. This is plan B. And so if you're out here as a bull, well, this never happened. Not to you anyways. And so now a bull could be looking for new opportunities to get long. It's just the zone, yo. But it's the area in which you would wake up and smell the coffee instead of wake up and smell the concrete. Osmond's anticipating stimulus package after the election, which means it would be non-politicized. All right. The IPE in me, the International Political Economist in me, would say, well, what's the point of that? Remember, politics is about power and influence. So to wait until after, like, what's the point of that? So, I don't know. To me, there's no political point. If there was no political point, they would have done it already. So, I don't know. Okay, so, first of all, I look at this, and this is extremely logical. The market is not freaking out. If you were a bear, you made money on it this week, and that's that. Okay? That's it. Done. If you were a bear, you made money on it this week. If you're a bull, you did not. Bears had to wait a long time, so don't feel, right? So now you have to ask yourself, over the next 3 days, if you are a bull, what do you need to see before you put together this bullish plan? This is how I want you to be thinking, guys. Over the next 3 days, which could be today, it could be tomorrow, it could be Monday. If you are a bull, what do you need to see before you buy to take this north? No, and thank you, Osmond, for, yeah, thank you. That's all I'm saying. Okay, that's how you trade. I don't know if this is going up. You don't know if this is going up. But if you know you're a bull, you should be able to analyze the reasonable prices in which you would consider buying. Okay, one zone is here, the other zone is here. First one failed, get over it. Now you're in the second zone. What do you need? What do you need? Write that down. What do you need to see? And you're thinking, well, certainly not lower lows. Okay, well, okay. So there's that. Let me also put this into perspective. This is a bullish move earlier, right? Earlier in the week, it was still bullish. And we know this is the sell zone for bears. We know that, oops, let's try to get this less thick. Let me change the color. Okay, and we know this is the price. In fact, the reason, because it held here, you're thinking, oh my God, I might have a shot. This is you as a bear now. You're like, I don't really like it. It's a little aggressive, but I get it. So now, what do you need to see? Well, a double top's pretty cool. A lower low, lower high is pretty cool. A lower low, lower high is pretty cool. Lower low, lower high is pretty cool. Lower low is, oh, it's over. Okay? This is the importance of knowing your prices. Okay? If this occurred at a different level, you would behave differently. Okay? See, if you go back in time to here, you would have said, right? You would have said somewhere between 17 and 1660 is your buy zone. So what are you going to do on Friday? Well, on Friday, you could do a front run, or you could wait till Monday and buy a dip. You understand? Plan A, plan B. You don't know which one's right, but you know the price and you know what you want to do. Okay? So you're a bear up here and you're like, ooh, higher high, all that kind of stuff. But you know on Friday that is your best expected sell. It's not that you're going to get it. Okay? Don't think that way. These are just charts. You look at it, and based on your rules of engagement, that is a fire zone for a bear. An important one, not just a random one. It's not like, Wayne, you got like 900 lines on your chart. Every line is going to be something. No. These lines have meaning. If you don't know the meaning, you don't have the education. So let's say a day or two, you say to yourself, well, if we close up here, that'll get interesting on Monday. That'll get very interesting because we will be at that price. Now, I think it's quite dangerous until you get this lower low and you breach the 21. Once you got that, you got a double top, lower low. Yeah, you're going to engage. You're going to engage. Okay. You don't know along the way if you'll hit your target, but you know if you sell here, the textbook, the one I wrote, says that is your target. What do you think? Okay. This is a standard operating procedure, you all. Based on what you see on this chart, if 118.27 holds as resistance, the target is 117.04. That's what it says in my book from, what is it, 12 years, 14 years ago? That's what I put in my book. It's neat, right? So you don't know if that's going to happen, but if you're a bear, you know where it would happen if it's going to happen, and then you use things like moving averages and price action to thread together your trades. Okay? So what do we know now? Let's talk about the future. If you were a bull, you're thinking this 117 level has a high probability of bears leaving the market, so this might be an opportunity for a bull to tiptoe in. Based on current market conditions, you would like to buy it at 116.98. Dude, that's less than 5 pips away. So your plan for next week as a bull is buy it at 117 and drive it up to 118.30. That's what it says right now. I don't know if it's right. I don't know if it's going to happen. That's irrelevant. That's what it says. When you read a book out loud, it doesn't mean you wrote the book. It means someone else wrote the book, but you know words and language, right? You know how to read. So this is not my opinion. I'm looking at the chart, and that's what it says. Okay? If a bull doesn't buy it at 17, they're going to buy it at 16.30. Remember, market conditions will change. Those are also guesstimates based on the current market. And these guesstimates are looking at the highest high. Okay? It's looking at the lowest low and then assuming the market's closing right where we are now. Well, what we don't know is if it goes lower. Well, then we have a new lower low. We don't know where it'll close. Things can change between Thursday and Friday. A lot of time, a lot of water under the bridge. So that can change. So we could be back up here, which would then change all these, right? So I've explained the math so many times. At this point, you should understand how these, If it does this, what will happen to next week's pivots? If it does this, what will happen to next week's pivots? If it does that, what will happen to next week's pivots? And remember, we're more interested in next week than we are today. The reason I say this is this trade's done. I don't know how far it'll fall, but to me it's irrelevant. If someone starts trading it now, they're a fool. I mean, to the downside. If they start selling it now, they're a fool. Okay? You want to be brave here. You want to be brave, be brave there. If you want to be brave there. You want to be brave there. This is just stupid. If you start selling now, you're like, oh, well, Wayne, it's so bearish, it's going to go down here. Doesn't matter to me. You're not following the rules of engagement. Okay? So what we're more interested in is, well, what's going to happen next week? And so I know right now bulls are eyeballing this. Bears should be exiting. So a bull should be saying to themselves, or asking themselves, what would they be looking for before they buy? You see how that keeps you out of trouble? What do you want? If you're a bull, what do you want? What is it that you're looking for? I don't know. Then you're not going to find it. So we had a conversation with Daniel earlier in the week, or maybe it was last week. And the conversation was a 5-8 cross on a 5-minute chart or a 21.55 cross on a 1-minute chart. Either of those are valid, but they're also irrelevant. So like my response to Daniel's 21.55 on a 1-minute, sure, go ahead. Just the fact that he's waiting for a proper entry to me is great. But a 21.55 represents a market, and there is no market on a 1-minute chart. There's only price. And I would argue there isn't a market on a 5-minute chart either, only price. So what do we use to measure overbought and oversold conditions for price using moving averages? And that's 5.8, not 21.55. So I'm like, well, you could do a 5.8 on a 5 or a 5.8 on a 15. You could just whatever, but the fact that you're waiting at your prices and you're ambushing, perfect. Okay, perfect. The fact that you got your finger on the trigger and you're waiting, that's what matters. Sure. Well, what Daniel, what you're saying is you're looking for congruency on multiple time frames. So you've noticed that if the 4 hour is bearish, but you're a bull, you should be cautious. Yes. Okay. Now, over time, Daniel, you'll need, as you improve, because what you're saying now is you're going to wait for the 21.55 to go bullish before you drop into a smaller time frame and all that kind of stuff. Okay, that is not bad. I can't disvalidate that. I mean, yes, all what you're saying is you will only buy in a bullish market. Cool. You will miss a lot of trades, however, because the 21.55 cross on a 4 hour will take a week. So the next level is to have a little bit more finesse and a little less mechanical processes. And the finesse is understanding where it would go from bearish to bullish before it's gone from bearish to bullish. And then thread that together. So yes, you're right. Do top-down analysis, but also bottom up. Okay, so you could do things like this, Daniel. Let's say, okay, this is the monthly M3 from last month, and this is the monthly exit. Okay, you understand what that model represents, that pattern. Okay? So if you wait for the 2155 cross before you become a bull, then the permission to engage you're looking for is at this X, right? But bear in mind, by the time you actually get that cross, you're actually way up here. Okay, it's way up here because these moving averages are lagging. So by the time you actually get the cross, you're way up here. So your best case scenario now is you get this one trade and you rode it from Thursday to Monday, and then you're out. But your 2155 bearish indicator on the 4 hours is only taking you out now, and look where we are. See, here's the cross. It's just crossing now, but look where we are. That's what I'm saying, like this cross here, what you don't realize is it happens when you're way up there. So you're always way out of position. Okay? So let's see if we can improve this. Based on your understanding of market behavior, right, your model of how, your mental model of how the market should behave, okay, you know this is an exit to the up, right? This is a potential up for bulls, okay? We know it starts with a bearish exit, but we also know this is a bullish buy price. We know 1.1635, okay? We knew that last week when we were at 619. Okay? All right, so let's look into that. So now you're trying to get in before, look at this. You probably don't even get your 2155 cross until we're at 117.85. Like, it's 100 pips or more. Holy smokes. You have to wait 100 pips just to get the signal to be a bull. So I think we can improve that, right? So if you already know this is a bearish exit, let's put that into context. Okay, the first minute of the new week, we're at the exact buying price. And you're like, huh, well, that's interesting. If it were to go up, it would go up when bears exit. And if it were to go up and bears were exiting, bulls would buy it at this M2. For sure, right? Okay. You see? The following week, this is the buy zone, and it's above our monthly buying price. So with all this in mind, we know that somewhere between 16.19 and 17, we should be on this. A full 80 pips earlier. Okay? So what could you do? Wouldn't that be risky? Why? Why? If you anticipate, let's put it this way, Daniel. If you anticipate bears to exit, and if you were a bull, you would buy, I mean, that's a boring, basic, everyday swing trade. That's fall off the bus, click a button swing trade. It takes no effort, no planning, no nothing, freebie. Okay? So if you get these two together, that's risky? Why? That's a lower low to you, huh? So let's take a look now. Let's go to a 15-minute chart. Of course, that's all messed up. Hang on. Okay. I don't know if I'm going to be able to delete that on this time frame. Let's get rid of this. Let's get rid of this. Okay. Let's go into like a 15-minute chart. I have to go to a 30-minute chart. All right. So your higher low, higher high concern, or your lower low, lower high concern. what you're looking for in this period, because you're like, oh, if this is going to go up, this is going to go up at that price. Okay, Daniel? There's your thought process. And right now you're saying, well, it's a bit risky buying a lower low. Okay, fine. I got you. So what do you need to see in here at your weekly M2, at approximately the monthly M2? What do you need to see before you buy it? How about a ginormous rally and a beautiful Fibonacci pullback onto your 2155 cross? Okay? Boom. Okay? You would be in, let's say 1650 versus 18. You're in 150 pips earlier. Or at least you, somewhere along this line, you have an aha moment. Okay? I want you to not be so mechanical where you're like, well, I can't do anything until the 4-hour 5A cross crosses up. Well, what are you going to do? Then what are you going to do for the next 3 weeks? Nothing? Thought you want to make money. No, I know. But I'm trying to make a point. Okay? I'm trying to make a point. You have to be able to think ahead and say, this line in the sand is meaningful. It is, meaningful. It's meaningful. Okay? That matters. Okay? This line here matters. It's like the most important line on that side of the chart. And you're trying to put together the month of October, but we're still at the last week of September. We're still talking like September 27th. And you're already thinking October. Where's your October price? Okay? Notice though it closed high, and at that time, this would have been down here, by the way. Okay? Don't get caught. Think about it. Where was the close on the 27th? Down here. So where was this line? Oh, it was right here. So what did traders do? What did bulls do? They got the higher high, they bought the dip, the roll reversal on that current October M2, and they're gone. It's done. Dirty deeds done dirt cheap. You don't see it now because they closed way up here, so obviously it pulled it up. So there are buyers here. And by the 28th of September, we're already done October. They're done. Their stops are down here. They're not sweating bullets at all. Okay? But if you waited to trade here because you were relying on the 4-hour 21, I don't think it worked for you. In fact, you might have got this, but I doubt you got that because you waited so long to be a bull, you didn't even see the bears. You didn't see them coming. Right? What you were hoping for was this. As was I. But, okay, so that's how you need to, yes, top down is super important, but you also need down up. If you don't do down up, we'll put it this way, if all you do is top down, you're always looking at past. You're always looking at the past. You're always looking backwards. I cannot trade this until the 2155 crosses, right? Dude, you're looking at what happened 4 days ago to try to make a decision for today. But I'm not asking you to make decisions for today. I'm trying to ask you to make decisions for tomorrow, for next week, for next month. So for that, you need to be forward-looking, and you need to see what is now and anticipate what is going to happen versus seeing what has happened and waiting for that to change. There's a difference. Okay? And it helps you temper your enthusiasm. It helps you temper your aggression. So you might argue because the 2155 is still pointed down on the 4-hour, I should ignore this? I'm like, no frickin' way am I going to ignore that. There's just no way I'm going to ignore that. No way, bro. No way am I going to miss that if I'm a bull. Okay? But it's helpful to know the overall market on the medium term, let's say, is not bullish yet. Okay, but I can take a shot here after the higher high, higher low, especially if this is the M3. I would, right? I'd jam my stop, take a walk, I'm done. I got the weekly move, I got the monthly move. I'm probably going to be right. And if I'm not right, I'm not going to lose money. Right? That's that. So you have to be able to, that's the finesse side to say, okay, it is bearish on a 4 hour. I'm a bull and I see that bears might exit. What can I do on the smaller time frame, predicting the potential for a reversal to be on the reversal? Okay? Well, is it a dip or a drop? Okay, let's put that together. Because I did a speech recently and I said, buy the dip, not the drop. So now you're worried about the drop. Okay? All drops hit floors. Okay? Every single drop of rain will hit the earth. It is written. Okay? So there it is. Monthly and weekly. Great. So if you bought, am I buying the drop? Well, if I bought there, yes. But where am I buying? Here. There's a difference. I said, at this price, I expect up. And if I see green candles, I know it's bears exiting. I know it. I can smell it. So there's my green candles. So do I buy green candles? No. I buy red candles. Okay? And I will, for the 5th time, let's change this to a gray. This pivot wasn't there yet because this pivot is based on a high close. At that time, the pivot was here. So let's see. We kick out of the bear's profit zone, make a higher high on a 15-minute chart, let's say. I mean, this is hours and hours and hours of rally at exactly where you'd expect it. And then it retraces back and finds support at exactly where you'd expect it. That's where I buy it. That's a dip, my friend. Okay? Oh, Conrad. Okay? You see? That's a dip. And that's the rally. Okay? It's not a drop. If it hits the floor and bounces, it's not a drop anymore. So that's the key thing. Remember, nothing is valid unless there's support and resistance. The support and resistance it comes first. It's the highest priority. Okay? So the fact that you identified the support and resistance first, then you see a ginormous rally that lasted for hours and hours and hours. You're like, oh, I'm buying the next dip, bro. Gone. Okay? But you had to have that bias first, right? And you knew how to behave this way because of what you saw in the 4 hour. But the 4 hour is so unbelievably lagging, especially at 21.55. You'll always be 100 pips late, always. Now, if you catch a good trend, especially with a flow behind you, a seasonality behind you, you'll be fine. But but you're going to miss a lot of parties. Right? It's like showing up late to a party and all your friends are already drunk and they're like, oh, this is the greatest. I love you, man. I'm so glad you're here. You're like, oh my God, this is terrible. Because you're sober. Okay. You don't want to show up late to the parties. Cool. Now, do you remember the days when your charts looked more like that and you had no idea about this? Remember those days? You had no idea that this was meaningful, that this is where the reversal would happen? Those would have been horrible days, right? You're like, I don't know why it flipped there. Why did it flip there, guys? And you'll read on, in whatever website you read, or you'll watch TV and someone will say, oh, it was the Russians, it was the North Koreans, it was some stupid, dumb reason. And then you find out that, 3 weeks earlier, you knew that that would be the bottom and the most likely place for a reversal. Then you're like, you know what? I don't think it was the North Korean military parade that did that at all. I don't think it's what Nancy Pelosi said at all. Like, what is that analyst thinking about? Have you ever been there, guys? When they're like, oh, that's the Nancy Pelosi tweet. You're like, dude, I knew 3 weeks ago that that was going to happen. Like, what the hell are you talking about, that Nancy Pelosi tweet? But I read that stuff all the time, and I don't even try. I try not to read. I try not to read stuff. I honestly do. And when I do, like I got a new phone not long ago, a couple of weeks ago, and Google's like everything is automatically pushing me news, and I'm like, this stuff sucks. It's all spam clickbait crap. I'm like, right? Top 5 reasons how to save money for retirement. If you thought this celebrity was pretty, you should see them now. Like, oh my God. And this is what people actually read. And I just melt. Like, I hate society. I hate that. We have a powerful computer in our hands. And that's the crap that people read? And then they're like, oh, you should see my cat. And they post that on Facebook. That is the sum of humanity's brain power? You're kidding me. It just drives me nuts. And then if I accidentally read some other analyst report and they'll say, oh, well, the Euro USD flipped today because of the Nancy Pelosi tweet. And you're like, oh my God, that is dumb. That is just dumb. You're like, it's dangerously dumb. You're like, it's like negligently dumb. It hurts people. They lose money. You're like, that's a buy. That's a buy. This was a buy. Well, Wayne, that one didn't work out. Yeah, that's why you have a stop loss. Okay? You're like, you knew this in advance. And those are just weekly. We got to put this on monthly, right? So, like, that's the funniest thing. So let me put this on bearish bias, and then I got to turn on the target, and gives us the target. Okay, boom. Now I zoom in. So we're talking about, wait, which one are we on? What was I doing? What time frame is this? Oh, no wonder. I'm like, what was that? Monthly. Okay. Right? You're like, that's a Nancy Pelosi tweet. Well, let's see. Way back in August, way back in August, we knew this was a sell zone. And if you sold there, that this was your exit. We knew that in August. This flipped the last week of September. You know what I mean? Like, and you're telling me that's a Nancy Pelosi tweet? Are you mentally deranged or right? This is what I read in the news. I'm like, oh my God, they're just making this crap up. And the funny thing is, because most of them are journalist majors that became reporters on Bloomberg and CNBC, they actually believe it because everyone in the office is talking about the Nancy Pelosi tweet, and they're like, oh my God, did you see the dollar flip? People are selling off dollar because they've lost confidence. You're like, whoa, 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 whoa. Dollar sells off when they gain confidence. Like, I hear the opposite a lot too, where they're like, see, that news came out and that weakened the dollar because the news was bad. You're like, dude, you don't even understand, right? But I'll tell you what, though, to be fair, I am switching over from Bloomberg. So I use Bloomberg. If I was going to watch the news, I would watch Bloomberg. And there's some stuff on their apps that I kind of like. And, and I've been on Bloomberg, I don't know how many times now. But so I kind of like, I know them, right? But their stuff sucks now. It's so politically focused. And spammy now too. They take that, those spam clickbait articles that they get paid for, and they throw that on their app and on their website now. So I'm like, okay, if you're going to do that to me, I'm not interested. So I'm going back to CNBC. CNBC. Yeah, Bloomberg used to be important, but now it's just like, oh my God, it's really, really anti-Trump. I'm like, okay, you're a journalist. You're not supposed to have an opinion. Okay, on our next guest, we have someone from the whatever, institute, and they're going to come in and tell us 9 reasons why Trump is a fool. So, tell us, why is Trump a fool? Well, Trump is a fool because you're like, oh my God, I'm not interested in your political opinion. I'm not. I don't care about other people's opinion. I do my own work. I make my own opinions. I would never, even years and years and years ago, when I lived in San Francisco, I'd get the Sunday New York Times. And I used to love to sit in bed and read and have a coffee and get up and have a salad with tree oysters and flowers sprinkled on top. And anyways, I'd read and then I found out that there was like 100 pages of this newspaper, which were like people's opinion. I'd just throw it off the bed. I'm not interested. Just throw it. Why would I care about someone else's opinion? I don't understand. So when it comes to Forex, especially when it comes to investing and trading, I like to have the TV on because it's good to see another human face. And sometimes hearing an expert talk can be helpful if it's proper information. And even when they're sort of like, to me, like talking their book, at least I can look at it and understand them like, oh, he's talking his book. But when it just comes out and it's just filtered process messaging, I'm not interested. Right? Yeah, that's what it seems to me on, but I don't watch, like, I haven't turned CNN on in like years. Like, I literally have unplugged. And I'll remember the day specifically, Ben Bernanke had testified the day before in Congress, because the chairman of the Fed, or the chairperson of the Fed, twice a year does testimony. Okay, great. I actually watched it live. Me and like 3 other people, right, in the entire world actually watched it live. And it was great. And I thought he did an all right job and all that kind of stuff. And he said something like, if you interpret what I said as being, let's say, if you interpreted what I said as, for the Fed to, let's say, raise interest rates, then you are wrong. And the next day I'm having breakfast, and I think at that time I got Investor Business Daily and the Wall Street Journal. So I'm having breakfast the next day, and I opened up the Wall Street Journal and I read their article. And it discussed Chairman Bernanke's testimony. And they were 100% inaccurate. They were absolutely 180 degrees off. Bernanke said, if you interpret what I said as the Fed thinking about it raising interest rates, then you're wrong. So the Wall Street Journal told me, Ben Bernanke said the Fed was thinking about raising interest rates. I was there, and he said, we're absolutely not thinking about interest rates. And if you interpret that what I said means we're thinking about raising interest rates, then you were wrong. So I canceled my subscription right then and there. That's it. I don't listen to anybody about nothing. You didn't read the report, you're a fool. If people pay you money to be an expert, they expect you to read the report, not the newspaper. Now, it's because I'm yelling, Jeff. Okay? You need to do the work if you want to be an expert. You don't babble what someone else said. You don't take my stories and tell it to somebody else. You don't listen to guys on TV and then go talk to your clients and tell the same stories you heard on CNBC. You're the expert. People rely on you to make decisions. Therefore, you need to do the work. They pay you money to do it. And you should gladly do it. And you've seen so many times where I show you the report, it takes me less than 12 minutes. Sometimes it's less than 3 minutes. Sometimes it's less than 2 minutes to download the RBA statement, highlight a couple of sentences, okay? And you're done. You can't do that, you're not an expert. Okay? So maybe says, and then Trump has to fight that. So, I'm not... Look, Trump has his own personal challenges, for sure. But I still think it's funny, and maybe it's only the Democrats that I know, but I'm like, oh, you really hate this guy. You should read his book. And no one's ever taken me up on it. That's it. No one has ever taken me up on it. You guys should read Trump's book, The Art of the Deal. The upside of reading the book is you don't have to read the second half. Read the first half of Trump's book. You can still hate him. I don't think it's going to change your point of view, but you'll know him because it's a day-by-day review of his itinerary. Now, there's a story thread behind it based on everything that he was doing, but you'll learn about him and his childhood and his dad and his upbringing and how he used to walk the streets of Manhattan when he didn't have much money. And he was a dreamer, a young man looking up at the buildings. One day I will do this. And he did amazing, extraordinary things that are beyond belief. Now, he's Trump, so maybe it's a little bit storied, but he did do it. Right. Now, Blue Boy says that's how, but that's the part that I like. Lucas says it's absolutely terrible. I liked that it was raw. It's not even a book, but once it gets into like casinos in New Jersey, all of a sudden I like, okay. And then he gets into like, he bought Eastern Airlines, and then he was trying to challenge the NFL by starting his own football league. You're like, but think like it's insane to think he challenged the football league. He was going to replace the NFL with something different, but it's interesting. But it's just it goes on and on. So I kill it. But read the first half. How he created Trump Tower, for example, and stuff like that. How he had to fight and fight and fight. But right. Okay. No, so Luca, I saw the message. That I'm definitely right. Right. I definitely can fall in that trap too. Right. Especially if I talk for 2 hours a day, I'm definitely going to make mistakes for sure. Yeah, well, I didn't say it was a good book, Blue Boy. I said if you want to know Trump a little bit better, you should read his book. That's all I'm saying. And I thought it was interesting. It might be a better audiobook. Right? It might be a better audiobook. But, there are so many people that have strong opinions and they haven't done any real work. They just have the opinion. So we got to be careful of that. That's all I'm saying. And when it comes to, not politics, but trading, we need to be very, very careful. In my experience, so maybe I have a tainted experience. Obviously, I'm biased. But I've had the experience where I relied on newspapers. I used to get so many, dozens from all over the world, all that kind of stuff. I used to watch Bloomberg and CNBC religiously until I started getting misinformation. So maybe it wasn't like that in the beginning, but now, more recently, I might be uninformed because I haven't read or watched these programs anymore for several years. But there was a period of my experience where I was getting misinformation. It was literally wrong. And I'm like, I can't have wrong information and make financial decisions. Okay? JKM, everyone with lots of money is in debt. Right? We call it leverage. Okay? The secret to getting very, very wealthy is to always be completely broke. Okay? Wealthy people have no money. You have to understand that. Right? People with money or people with wealth have no money. They're always, always dead broke. They have assets. And those assets produce cash flow. And then from the cash flow, very often to do the things you need, you borrow against the cash flow. Okay? That's pretty normal. It's very, very normal. So I've known many people that are, let's say, billionaires. Okay? Literally $1 billion. But they can't buy a Ferrari. They don't have $200,000 in cash. I'm not joking. So, but there's a way to get it. Now, first of all, you walk into a Ferrari dealership, you're like, I'm a billionaire, but I don't have any cash. And they're like, oh, well, we'll give you the car. We'll give you the car and make the payments. Okay, fine. Okay? There are other ways of doing it. So, like one of the examples I know, I spoke with a Ferrari mechanic in Connecticut, and his client bought an entire, not a warehouse, but a factory, a World War II canning factory, 2 stories tall, the length of a football field, and at one end they had an industrial elevator large enough where you could drive a car into it and go up to the second level. So they bought the whole thing. It was all brick and glass ceiling, all World War II style. They bought the whole thing and put his car collection in it. So imagine this one collector had hundreds of cars. Many of these cars are worth more than $1 million. And so the guy I was talking to, it was his full-time job to just take care of the cars. The client lived in England. The cars lived in Connecticut. Do you understand? Like, right? But the guy would call up in the middle of the night, just randomly, the client would call up and say, I need $5 million. I need you to wire it to me as soon as possible. How much is in the car account? Oh, well, we only have $3 million in the car account. Well, sell a couple of things fast and send me the money. I need it in less than 24 hours. Like, you own, just your car collection is worth, let's say, $400 million. But he doesn't have $5 million in cash. Oh, is that right, On? So, like, so if you don't know people like this, then you would look at Trump and be like, oh, he only paid $750 in taxes. Dude, wealthy people don't pay taxes. What are you talking about? He doesn't make money. Do you understand that? Rich people don't earn a salary. They don't pay taxes. They own stuff. Okay? They own stuff, and from that, their corporations and their companies and all this kind of stuff, it's all there. And then you leverage against your cash flows that come from your assets. And like, you don't earn a salary. You don't have money in the bank. It's like a different world. And so I think it's a real fallacy or let's say it's a little misleading, if not very misleading, to say Trump paid $750 in taxes and he's got debt up the yin yang. This proves he's broke and he's a liar. That is not accurate. I don't know him personally, and I haven't looked at his, I know all this. But if you tell me he's a billionaire and he only paid $750 in taxes, I'm like, yeah, that's how the laws are written. Joe Biden wrote those laws over the course of 50 years. That's how it works. This is America. That's how it works. And then he's got debt. Of course he's got debt. Do you own a house? Yeah. Do you have a mortgage? Yeah. Oh, you're in debt. You're broke. Right? The cash, okay, and debt and net worth, these are all very misleading things. So when Trump gets on his private jet and flies to the Caribbean and stays in his $40 million house, all right, and eats at fabulous restaurants and lives this crazy life, yeah, and he's broke. He doesn't have any cash. He doesn't have money. Money is the illusion. But he owns assets, produce income. Now you're like, well, those hotels are way overpriced and all that. Look, they're earning income. They're earning income, and then that gets spent on things, and those things pay taxes, by the way. All those individual things. So like you own an apartment building, right? So you got your cash flow in, the rent, right? Minus your expenses is your net operating income, right? Your NOI. And then in there, you have your cost of money. So you've borrowed money, right? You write off the interest. That's an expense, but you can't write off the principal. No, because that's not right. That's amortization, right? And that comes through. Then you pay your taxes. Do you understand? Then your asset that you own, it pays taxes. And at the end, there's some cash. But meanwhile, think of this. Over the course of years and years and years, who's actually paying the mortgage? Okay? The renters pay the mortgage and it amortizes down. So after 20 years of collecting rent, the value of the asset has gone up. Why? Because it's been collecting rent. It earns money. It's worth more. But also at the end of it, what? The renters have been paying the mortgage down for 20 years. So now you have this, you owe the bank less. So there's equity, not cash, by the way, equity, right? And then over here, right, the value has gone up. So your net worth has gone up, but you still don't have any cash. You could have $100 million net worth and have no cash. Now, if you sell your asset, now you pay taxes again. Not just income taxes, but now your capital gains taxes. Now, if you're a real estate investor like Trump is, in the United States, there's a way It's an exchange where you can exchange your asset for another asset and defer your taxes. And you can do this over and over and over and over again. It's not paying taxes, but owing taxes. And then the day you die and your heirs inherit your net worth, all your assets, guess what happens? All those taxes you've deferred for 20, 30, 40, 50 years could be worth $3 billion if you're Trump. It could be $10 billion worth of deferred taxes. Guess what happens? When Trump dies, they're thrown out the window. So when you first buy the property, you got the amortization, and then you got the appreciation, but you also get to write off depreciation. So what happens, long story short, guys, when you own stuff, you are broke. Who has cash? Poor people. They don't own anything, so they go out and buy a TV. Here's $1,000. Oh, I'm going to go to Walmart and buy a TV. That's why they're poor. Okay? So the opposite is when you have no cash. Why? You took all your cash and you invested it into assets. So you have lots of assets. You have huge net worth, but you don't have cash. So look, if you were to design a real estate investor, we won't call him Trump, we'll call him somebody else. But if you look at what that business is like, the taxes will come out exactly that. You will see that the system is designed because Trump probably only paid him $10,000. He probably collects $1,000 a year from 10 of his companies. He probably made $10,000 in salary, and he paid $750 in taxes. But that's not, he earns money on ownership. And those assets can be borrowed against providing, right, money, but not salary. And then from that's what feeds the airplane. That's what feeds the limousine. That's what feeds the fire. But it's debt. Debt that will be written off. Okay? But if you don't understand that, you don't understand how to be rich. You may have not actually met someone with that kind of money. They're all like that. Okay? So another guy that I met, he got a huge bonus, whatever it was. And so we're talking, and he's like, "Yeah, I got my vacation home here. Do you need to buy it? Do you want to buy it? Are you interested in buying it?" And I'm like, "Oh, I don't know." Now this guy is a huge player, and I'm just a peon, right? So I can't say, "Well, dude, I don't have your kind of money," because we're hanging out. He's drinking my wine, for Christ's sake. So I'm like, "Well, that depends." And he's like, "Well, it's really nice. You know, I bought it for $30 million, but I will sell it for 20." JKM says Trump is running again. No, everybody does a JKM. It's how it works, is my point. Trump might be a liar. He might be a lunatic. I'm not saying he's good or bad. That is the game. That's how the rules are written. Nobody does it any other way. Those are the rules of the game. That's how it works, guys. No one with, right? Now, how many people earn like $20 million in salary? Well, very often, it's not that way. Like, I wouldn't be surprised. I don't know. Let me pick Jamie Dimon from JP Morgan. I don't know how he earns money, let's say. But very often in a situation like that, he'll earn $1 a year salary. But then he'll earn, $50 million a year in stock options and performance bonuses. Bonuses are distributions, not salary. And it's all taxed differently. Right? I'm sure it's pretty rare for a CEO of any company to be earning 40, 50, 60 million dollars a year salary. Right? Now, what about the guys that earn 3, 4, 5, 600 million a year? Do you think they earn that in salary? No. And what do they do with it? Put it in a bank and then what? Play with it and stuff? No, they don't. No. So it's very different. So let me end it here because I know this is a huge digression. There are two taxation systems in the United States. One is for poor people and the other one is for businesses. Wealthy people own businesses. A business can be a trust, a business can be an LLC, a business can be a corporation. Okay? So for example, you might be a co-owner of an LLC that buys an entire portfolio of real estate apartment buildings. You might be a co-owner of this LLC and it owns 30,000 apartments in the United States. But you don't got no money. Okay? You might own a corporation. You own a business. You pay yourself $1 in salary, and at the end of the year, your small business made a $10 million profit. You keep $3 million for reinvesting into future projects, and you pay yourself the other $6 million. As a salary? No. As a distribution? Yes. And of course, you're going to say, ooh, well, before I do that, maybe my business should buy a jet. And now your business owns a jet, and now you didn't pay $6 million to yourself, but your business that you own owns a jet, or at least a fractional share of a jet, and it pays the maintenance fees, and it pays the fuel fees, and it pays the storage fees, and they're all tax write-offs. And really, when you see these rich guys and they're like, look at me, I own a jet. No, they don't. Their business owns a jet. So at the end of the day, they're flying around in their jet for their business, doing business stuff, having business deals, going to business conferences, living a business life. And at the end of the year, they get paid $1 and they're like, look, I'm broke. Do you understand? People don't own private jets. Businesses own private jets. And all that gets written off in taxes. Okay? So very, very few people pay tons in taxes. Now, when you look at the number, I definitely paid more than Trump did in taxes, but he's richer than me. Yes, I am not $400 million in debt, but I'd like to be. Because that means investors, maybe it's in the form of banks, have helped me accumulate massive amounts of assets. And those assets are producing income. And from that, the income can produce or pay for business expenses. And if that means my business pays for my limousine, and my business pays for my jet, and my business pays for my corporate apartment, and I only make $50,000 a year, but I live in a $8 million apartment, and we have a $5 million fractional share of my private jet, and we spend $10,000 a month on my limousine service, but I got no money. Okay? It's all an illusion. It's all an illusion, guys. So be very careful. Once again, what you read is not necessarily 100% accurate. Okay? You have to think on a different plane. Unfortunately, we're not taught this. We're taught, at least, how about this? I'm taught. I was taught how to be poor. Okay? I grew up poor. I was taught to be poor. I was expected to be poor. I went through and I got a normal education from a normal type school. And in the 90s, I went to university and I got a university education, all that would have led me to being a night manager at Taco Bell. I grew up poor. The idea that I should get a good job, work my ass off, maybe get a promotion and a $2 an hour raise, and then take all my money, which isn't much because I borrowed to go to school. And then they're like, well, the first thing you need to do is borrow a bunch of money and buy a house, and then you do that, and then you should get married, and then you should have kids, and you should work 80 hours a week and be proud of it. And then at the end of it, you're like, oh my God, what the hell just happened? That was the path I was on, the education that I got. And that's 99% of people on this planet either have that education or have no education at all. So the 1%, think much differently. Now, something happened to me very early in life that really radically changed who I am as a person, okay? And that was in the 90s. I made my way to, as you guys know, to the board of directors of a nonprofit organization. I worked very hard for many years to get that. And I'm sitting on the board of directors with George Soros and the vice president of Arthur Andersen, the vice president of General Electric, the president of AT&T, like no joke, a representative from the United Nations, and Wayne McDonald, 20 years old, wasn't even allowed to drink at the bar yet. Okay, so there I am. I'm sitting on this board of directors, and I realize that this is the pinnacle of very few people's careers. How many people make it into a room like that and is elected to the board? What percentage of people get to be in a situation like that? I'm on Wall Street, which has just threw me for a loop because I had no idea before. Okay? I'm sitting there as an equal with George Soros. Yeah, and he was old then, right? I'm an equal with people running General Electric, AT&T, Arthur Andersen, which is now Accenture, right? You know what I realized? Very, 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 very few people get to achieve that. And it would be the pinnacle of their career. I was thinking, and this is literally going through my mind, I'm 20 years old. And I'm at my second or third meeting that I've done with this, right? And I realized if I was lucky, if I was born right in a different environment, if I was born somewhere different, because remember, I was born in Canada, right? If I had been given a different education, if I had known different people when I had grown up, if I had gone to Harvard when I was 20 and got the Harvard education, and then I got the amazing job, right? And then I went on and I stayed at that same career. Let's say I worked at Goldman Sachs when I was 25. Wouldn't that be great? And all of a sudden I'm 65 and they're like, you should come and sit on the board of directors. I mean, like, that would be almost an impossible dream, even if I came from that kind of background. And of course, I came from no background. As humble can be. But yet I'm in that room with these old guys, these old dudes. There were a few women on the board. They ran banks and stuff like that. Just amazing. And I realized that this was an amazing experience because if I had tried to get on a path like that, somehow find a company, work my ass off day and night for 45, 50 years for that company and get to the board of directors because that was my number one goal, guess what I had learned at 20? It sucks. I would have worked my whole entire life to get to that same position I was at in the beginning of my young man's life. Instead, I could have worked my whole entire life, and I could have been a 65-year-old man sitting on a board going, this sucks. I worked my entire life for this crap? First of all, none of the advice we give is followed, and all these executives are full of crap, and I have no power really to do much of anything, but if something goes wrong, I'm going to get blamed for it because I have a fiduciary duty to the board and to the court, to the shareholders. Like, oh my God, like, and it's just powerless, and there's lots of work to do, and I'm like, I'm 20, and I'm like, thank God I didn't waste my entire life trying to get to this position. I got to this position now, and I know it sucks. And that was my real education, I think. Much more important than Harvard. Is I realized that there's a different system, there's a different method, there's a different world, there's a different way. Okay? There's a different way. That changed the entire direction of my path. And it was weird, though, because there I was once I retired from the board of directors. I used to run a company of 3,000 people. I managed 15 of the 27 offices. I had a staff of several people. Okay? I traveled literally every week because of this position I was holding. And once I ended that position, once I quit, guess what? I was just another 22-year-old. Just another uneducated 22-year-old immigrant. And I'm like, yeah, thank God. At least I've seen the truth, and I know where I want to go. No, I know where I don't want to go because I've already achieved those goals, and I'm so happy I didn't waste my entire life trying to get there because I would have been very disappointed. Instead, I know sort of the false path, the path that's taught, and then there's another way, that way, in a completely different direction. And that comes from, yes, some hard work and some smart work, but really doing the right kinds of things. Okay? So there are two systems. The one that's taught will lead you to a good job and a nice house and a decent neighborhood, and you have a nice big TV, and you'll pay a boatload in taxes, and then you'll save and save and save and save for retirement. And if you're lucky enough to not get cancer and go bankrupt, then you'll live on a modest, tiny little salary, from your retirement, right? And maybe you eat cat food 4 times a week, but there's always the Sunday 4 o'clock dinner you can go to have, and then you live your nice little life, and then finally you get old, and then you die, and the government takes the other half that you didn't spend yet. They tax you after you die, so that your children can't have it, and your grandchildren can't have what you saved. Or there's another taxation system, guys. There's a whole different taxation. There's a whole different world out there. But only 1% of people know about it. Interesting, right? I wasn't taught that. I had to learn it. So anyways, peace on earth. May the pips be with you. May your profits be above average. If you're on my live trading group, I will see you for swing trading today at 4 p.m. New York time. If you guys are going to join my live group, then you have to go to fxbootcamp.com, sign up to take the video training courses. The live group is about live trading. It's not about teaching you how to trade. There's hours and hours, dozens of hours of videos for you to get that information. But now as you're learning, you can come to the live group and hang out with other new traders, but also hang out with very experienced traders and also get my feedback. So that's fxbootcamp.com. Thank you very much, everybody. Thank you for being part of the Forex.Today YouTube community. Thank you to Forex Everything. Tradersway.com. Thank you to Tradersway.com. Whatever. I'll see you guys tomorrow. Cheers. Oh, thank you, Maida. Saw that. Appreciate it.